Okay, welcome back to the channel, traders. In today's video I'll be looking at one of the most important foundational teaching or foundational aspect of forex trading, and that is market structure. Market structure. Before building any house, you will need to understand what kind of house you want to build. You understand the structure of the house you want to build even before starting up digging the foundation, because the kind of structure you want to build will determine what foundation you are going to lay. So everything on earth has a structure. Everything on earth has a structure. So today we are going to be looking at, since we are talking about forex trading, we are going to be looking at the market structure. You might have struggled to know what is the direction of the market. Oftentimes, maybe you are entering a buy thinking that the market will go higher, and you discover that the market decides to go lower, or you decide to go on a short to sell, hoping that the market will go lower and on the contrary, the market went up higher. It's because you've not really understand the concept of market structure. So by the grace of God, at the end of this teaching, you should be able to look into your chart and understand where the market is going, if the market is trending higher or lower, or if the market is actually on a consolidation phase. So the first thing you would want to know is, what is market structure? What is market structure? Market structure just simply means how price moves over time, the movement of price over time. In my previous videos, in one way or the other, I've talked about this movement in price, but today we're going to be looking at it in a very more precise way. So imagine that price is moving to the upside, creating new highs, forming new lows, and new lows breaking old highs to form new highs, and then pushing down lower, not taking down the previous low but forming a new low, and the new low pushing price up to take the previous highs. There's how we call it in the forex market. We call this is your low, your low, and then so we have a low. Now this low produces this new high, and then when price pushes down to this point, not taking this low here, this becomes your higher low. We call it higher low because it is higher than this previous low. Now this higher low produces a new high. It produces a new high, and we call this high a higher high because it is higher than the previous high. So it is a higher high. Now when price retraces back into it, not breaking this previous higher low, it is a new higher low. So we call it higher low. So when price forms higher highs, series of higher highs and higher lows, we call this an uptrend market. So this is a structure, a textbook kind of structure, We are going to soon go into the chart to see what it looks like on a real chart example. Now, let's see the next type of structure we can see in the market. Imagine the market pushing down lower, and then this low breaks this low here, and then forms a new low and pushes up high to form a high lower that is lower than this. Now this high pushed down lower and breaks this low downward. It forms a new low which is lower than this low, so we call it a lower low, and that is how market continues to go down. Now this is your high. This is your high. Take for instance, this is where price was, and we call this higher high, right? So this is your high, and now what happened? You have price come to this point to form a low, produces a low. So what do you see? Now, when price formed the low, it's pushed up to form a lower high. We call it lower high because it is lower than this previous high. So it is a lower high. Now, after that, after that, we see price replicate the same thing over and over again. This lower high, it is called lower high because it is lower than this high. Now takes out this low to form a new what? Lower low. We call this lower low because it is lower than this low. Now this lower low pushes up and forms another high, but this high is lower than the previous high, so it is called lower high. The same thing happens over and over again as price push to the downside. So that is what we keep seeing. Market keep forming same thing over and over again. So as price keeps pushing down, we call this a downtrend market. So this is a downtrend market. So we can see in the market both the uptrend and the downtrend. Market can either move to the upside or move to the downside, or market can do something like to range, move up, come down, move up, come down, not breaking any structure. So you see something like this. So when you see market moves in a sideways direction between a kind of a support, we call this support because it is supporting price to push to the other side, and we call this resistance because it is resisting price from pushing to the upside. So this kind of market is not breaking highs and forming new lows. So this is a kind of a ranging market or a consolidation. So this is a kind of structure we find in the market, and this is a kind of textbook knowledge. Now you cannot talk of market structure without looking at break of structure. You cannot talk of market structure without considering what break of structure is. And I have made a video for you guys on market structure. If you are new to this channel and you're just seeing this video for the very first time, you will see the link at the description below. Just click on the link to see what it means when we say break of structure. So having the understanding of break of structure will help you understand market structure. Now, when a high is broken to form a new high, we call this a break of structure. We call this a break of structure, or BOS. So when that occurs, market retraces back into it, and then what happens again? It will break the structure again. So it will break the structure again. Sorry. So this is what we have. So it breaks the structure again. That is what happens when market is pushing upward. The same thing happens when market is pushing downward. Market keeps breaking the lows. Keep breaking the lows, breaking old lows and forming new lows, breaking old lows, forming new highs and new lows, and so on and so forth. So the same thing happens. So that's what we see. Now we will just look at what it looks like to have a practical, like on the chart. Before we go to the chart, you can see price doing something like forming this leg, and then price will do things like this: come down, and then do something like this, come down, this might look very confusing, right? Yeah, it might look very confusing, but now look at it. You saw this move from here to this upside. Remember from our example, I said this is your low and this happens to be your high. This becomes your high, right? Now, market will move inside to a good discounted price level before pushing up. Now, whatever you see inside of this move, this upward move you see here, whatever you are seeing inside are what we call internal structures. They are internal structures. So you are not supposed to be confused about it. You just know that this is our high. As long as this high has not been broken, we are still inside. So it is when this high gets broken and forms a new high that you will now begin to say, okay, market is still up, is still moving up. But if you see this move going up, coming down, going up, you say, market is no more in uptrend, or market is now in downtrend. I want to start selling. Of course, you should know that if market is in an uptrend, you should be buying in an uptrend, and you should be selling in a downtrend. Any person you see that is selling in an uptrend and buying in a downtrend, we call it counter trading. So it's going on a counter trend against the trend, and it is risky to trade against the trend. As beginner traders, you don't know your levels, your key levels yet. It's not advisable for you to trade against the trend. So as long as this high and this low have not been taken, you cannot say the market has shifted or has changed the trend. So this is a new high. Now, when price move and breaks the level, you will look for the lowest level that price got to before breaking the high. Now, is this the lowest level before breaking this high? No. Is this the lowest level price got to before breaking this high? No. Is this the lowest level? No. Is this the lowest level? Of course, no. But this is the lowest level. So this becomes your higher low, because this is uptrend, because it is higher than this previous low. Now you now look for where is the point price got to before pushing down. What happened? Sorry. What happened? We saw price came to this guy. This was the form, the new high that was created. That's the higher high. Now you look for where did price get to before the lowest point price got to before breaking this high, because we have a new break of structure here. We have a new break of structure here. Where is the lowest point price got to? Of course, this is the lowest point. Sorry. This is the lowest point price got to before breaking the high. So that becomes your higher low. Now, there is something you would need to know about point of interest. In our subsequent videos, I'll be talking about the different types of point of interest that we have. Now, when you look at this higher low from your chart, you will discover that this higher low might not be in a good area or in a good point of interest. Now, maybe you still have a kind of a demand zone around here. You have your demand zone around here, and probably this is just a fair value gap that price reacted from around here. I think I've talked about fair value gap in my previous teaching, so you can just go to my page and then look for the teaching on fair value gap. So I've talked about fair value gap. So it's possible that price just mitigated the fair value gap and broke this structure, and now price is coming back here. It will use this low as an inducement to induce other people that want to buy. We will induce them, people that will want to buy from this point. Some people want to buy from this point. Okay, after every break of structure, let's look for a zone and just buy, and then they want to be buying from here. So price, we just use them as an inducement, liquidity. We just use them as liquidity in price. So they want to buy from this point and put their stop loss at this low, and they are targeting this high. So you can even see price do something like coming here and mitigating. They'll say, yes, we are in profit, we are in profit. They are in profit. Price is already giving them a little bit profit. And what you will see? You see price will just come and take them out. Boom. Now, using this guy, this low here, and this low here as liquidity. Use the both of them as liquidity. So those that have the knowledge of liquidity, we know that, oh, there's a zone that is not yet mitigated. I think gold did something like this today. So this zone has not yet been mitigated. So they understand that price should come into this zone to mitigate it. And what do you see? See price dishing out massive profit. So we'll be stopping here. Let's go straight into the chart and see some examples for ourselves. Let's go back so we can have a good example. Okay. Okay, so let me zoom out very well. Now, let's now read this market structure. Assuming this is where market was, and then it did something like this. This is what we were calling consolidation the other time, right? And now price pushed to the upside. What happened? It broke this structure. Broke this structure to the upside. Break of structure to the upside. Now what now happened again? It came down to this low, and broke this low. That's a break of structure to the downside. Now what happened? Price came back into that zone. This is price breaking the structure, came back into this zone here, and what happened again? Broke this structure down to the downside. So what do we have here? We have here as our high. We have here as our high. We have here as our high, and this guy as our low. Sorry, as our low. Now, when price pushed up, it formed a what? Sorry. It formed a lower high. Formed a lower high because it is lower. It is lower than this low. I'm sorry. It looks like I'm having kata. So you have a lower low because it's a lower high because it's lower than this previous high. Now what happened? Price broke this structure to the downside. This is it. The moment price broke this structure to the downside, what do we see? It formed a new low. This new low becomes our what? Our lower low. And price pushed up, not breaking this high. See it. This is forming an equal low. So it's forming an equal low at this zone. Forming an equal low. And what happened? Price pushed to the downside and broke structure again. So you would expect that every time price breaks structure is to move into a point of interest within maybe a premium zone in a downtrend or a discounted zone if you want to buy. So price pushed all the way up to this point here. To this point here. This is the highest point it got to before going down. So we have here as our what? Our lower high. And this is the new lower low that was formed. Now, I was giving us an example in when I was giving the illustration. Imagine that you see price. Look at what price was doing. So from this point now, see price going up, coming down, going up, coming down, going up, coming down. Now, if you do not have a proper knowledge of market structure, you will be thinking, okay, market should be buying, and now you are trying to buy from this point to target up, and price have gotten to a point of interest you want to start selling from because it's in a downtrend. So all of these are just noise in the lower time frame. They are the noise you will see in the lower time frame. So you see, this is what price is doing. It will be doing this, and I call all of this internal structure. So you will see within the major structure, you will be seeing internal structures. Don't allow yourself to get confused of what is going on in the internal structure. Okay, so now you keep on seeing it until the lower high gets taken. We are still in a downtrend. So this is another break of structure, and then price pushed up to this zone here, and what happened? It formed around here. It formed a new lower low, yeah, and here it formed a new lower high. Now this lower high, as long as this lower high is not violated, we are still in a downtrend. What did price do? It took out this structure, even though it was a sweep of liquidity. So it was a sweep of liquidity. Now, but if you go lower, you will see it was taken. And what did price do? It pushed up to form a new low. So we can say that this is the valid break of structure we had here. Now this is our valid break of structure, because this is not a valid break of structure. If you watch my video on break of structure, this is not a valid break of structure. A valid break of structure must close by a complete body, not with a wick. So now, where did price, so this is our lower low, our lower high. This lower high formed this new lower low here. So we have a new lower low here. And what happened? Price pushed up, and then we look at where did price break this structure here. This was where price break this structure to form a new low. The highest point price got to becomes our what? Our high, lower high. And then what happened? Price broke structure and formed this lower low again. So you continue to see price do this thing repeatedly. So we are still in a downtrend. Where is the highest place price got to? We have this lower high, and then price did what? Broke structure again. Broke structure again. We have our BOS. Repeatedly, you can continue to repeat the same thing until price show you anything otherwise. Now, after this lower high was formed, price pushed down lower to form a new lower low. Formed a new lower low here. And then what happened? The structure was broken again. Sorry. The structure was broken again by this high. This was the high that took out that structure. This was the high that took out that structure. So what did we see here? What did we see? We saw that the high that took out that structure was taken here. Was taken out. So this is a change of a character. Shock. This becomes a change of a character, telling you that price now wants to start buying. Price have changed from being lower, from going on a downtrend to going on a what? On a high trend. So you see price starts going up. So we have this becomes a low, and then this becomes a high. This becomes a high. Now, as long as this high here has not been taken, until this high is taken or this low is taken, we are still in the bias of the buy trend. But what did we see? We just saw this guy wicked it out. So this is a kind of a grab of liquidity, or we'll call it liquidity grab. So everything that is happening here, inside here, they are internal structures. Everything happening here are internal structures. So until we see a break of this structure to the upside, and here we got it. So we can now say, oh, this is a break of structure. And then you start looking for more buys. But within these internal structures, you can catch your buys, because I think this was an activity of a news. So you waiting for it might take a longer time. So you can just look for your entries from here and engage in the buy. So you would have gotten internal structure buys around here to engage in that buy. So but then This is what we've got. Now we see market came to this point and broke structure. So this becomes the lower, the higher low. This is the higher low, and this guy is the higher high. So we keep repeating the same thing over and over again. I have to take this long a time so you can understand it. So we have another break of structure here. Now this is the new low, this is the new low, and this is the new high. So as long as price does not violate this, we still have to repeat the same thing. This is another low. After this structure was broken, we formed another high. And then what did we see? What did we see? We saw that this low was violated. This low was taken out. This low was taken out. The moment this low was taken out, a break of structure or a change of character from buy trend. So we already see that this is no more a buy trend. Market wants to start what? Going lower. So you now start having lows. So this becomes your low and this becomes your high, a lower high, because it's lower than this high. Now when price breaks the structure again to the downside, you look for the lowest point it got to. So this is what price is just doing. So this becomes your new lower low. So price continues to do the same thing over and over again. Just be flexible, read your structure, and you will discover that now this is consolidation, this is price consolidating, this price consolidating, and then it took out all of this, boom, telling you that market is now changed to what? Buy. Now it's consolidating around this area, consolidating or ranging, just like I taught you, just like I said earlier on. So you will be engaging on the buy because it has not violated the structure of the buy. The moment it violates the structure of the buy, you want to start looking for sell. This is what you continue to do over and over again. See, broke this high, formed a new one, came all the way down to this point, still within this guy, now came all the way high. All these ones are just sweep of liquidity. Now what did you see again? Now price did what? Took out this high at this point, and then but you see internal structures you can engage. You see price pushing to the upside because it is still within the structure. See, price pushing high within the structure. So this is it. So that's what I have for you on market structure. As long as you can go into your chart and look at all of these things I've taught in this video, you'll be able to find a good way to engage the market. You find your own good way to engage and to understand the market. So look into your chart and understand it. You will understand how the market is trending, whether up or downward trend. So that will be all. If this video have helped you to understand what market structure means, then you can do well to hit the like button, and don't forget, if you are a new person on this channel, just do well to subscribe and share with other traders who will want this knowledge. Thank you. Until next time, happy trading.